Good evening, everybody. How's everybody doing tonight? Yeah, Caesar, we could take a look. Let's see. AV Go. Let's zoom out a bit. So this is one, it looked interesting a little while ago. Obviously, just like many names did before the market started continuing a bit lower. Held the 200-day pretty nicely there. But you're not really seeing any of that kind of bounce action like we are with a lot of the other names in the market. And we'll probably cover this a little bit to start the class off. But this name in specific is one that in the short term, it's not one I think is really ready to be traded. Let's see, let's just extend this a little bit over, right around there. It doesn't feel like this one's ready to be traded yet to me in terms of kind of a longer term position. You're at a real important spot. I mean, 185.26. And if I remember correctly, let's see here. If we reduce down to the last year, yeah, so reasonably big spot below around this 185 area. You got the 200-day point of control around 170. But for a trade, I mean, there's at least to the long side, it's not something that really interests me. I mean, you got a full-blown downtrend. What looks like maybe some could be some kind of bearish consolidation after setting this lower high earlier in the year. So it's not for me right now. I think there's better long setups in the market, at least in the short term, but this is definitely one that's at a very reasonable spot for a longer term investment if you like it. What's going on, Rob? It's good to see you. Welcome, welcome, good. Welcome in, everybody. All right, let me send out one more message letting everybody know we are going to get into it, and then we'll get going. Cool. All right. Okay, we'll get started. We'll let everybody else trickle in and catch up as they join us. Welcome in, everybody. Welcome to the lecture tonight. Today, the big idea is to cover what we call advanced price action, which is not really a single concept, but rather where we start to put a lot of the ideas that we've discussed and developed throughout this beginner's course series all into kind of a single lecture and start really packing everything together and start to unify some of the concepts that we've discussed. So before we get into it, kind of like we have over the last couple weeks, it's probably important to just take a quick review of where the overall market's at and apply some of the techniques that we've discussed in this course series, because obviously now is going to be just as relevant a time to take a look at some charts as any. So if you guys have any questions as I go through this quick review, we'll try and keep it short, maybe under 10 or 15 minutes. Just talk about where things are at, what's leading, what's not, what's working, what's not, and in general, the overall condition and health of the market. So with that, let's just take a quick look into where we're at on the S&P, and we'll switch back over to the SPX for that one. So just cleaning this up real quick for us. Gray line here on this chart is going to be the 200-day moving average. And that's really going to need to be the line in the sand in terms of bullish above, bearish below, as we kind of go throughout this correction sort of period. As you guys can see, as of today and Monday, we're now holding above this 200-day moving average 2 days in a row, which is definitely a positive sign. Also, real nice gap up on SPX that's holding open as well. So two decent indications of some more stronger price action coming out of the bulls. Also holding above this kind of significant pivot that was set back in early January. Still a bigger test above around the 58.50 spot. I guess 58.30 is a little bit more close to the actual level. Didn't quite draw the way I wanted it to. But overall, some real nice kind of action coming out of the market. You know, we've talked about how there's a time and place to be getting involved in the market, especially as a trader. If you're looking to the long side, it's going to be a lot easier to be long when the market's in an uptrend. And if you're looking to be short, it's going to be a lot easier to do so when the market's in a downtrend. And one thing that I want to reference here is going to be the VIX. And this is something that we talked about probably 2 weeks ago now. The VIX in general isn't an instrument that you should really be doing much technical analysis on. So I'll just make sure we get all the indicators off before we cause any kind of confusion there. Again, not an instrument that you should really be doing much technical analysis on, but there's definitely some key spots to be paying attention to, especially over the past kind of couple months, even the whole year, that have been respected pretty well. We have this 22 area, really this 28 to 30 area, and then down around this 15 spot. So the VIX has been making a real nice move lower, indicating that volatility is dropping off in the market, which should be generally a positive sign for bulls. And one thing that's even more noticeable is the amount of volatility and how that's dropped in the market in general. I mean, we have a basically fraction of a percent green day today, which is definitely below the average move that we've been seeing over the past few weeks. So volatility is tapering off a bit. Really now, the ball is in the bulls' court to start holding price above the 200-day moving average. Again, from a perspective, just looking at SPX here, you got two really important levels to be watching out. Really this 5,700 area and this 5,770, which Monday brought us above this 5,700, which is going to be that first important test. And then now we're starting to hold above this 5,770, which again, two real positive signs for the market. You know, a continued hold above this area in general, and even a retest back to this 5,700 wouldn't be necessarily a bearish indication at all. Seeing this level hold would actually be pretty positive, and definitely could set us up for higher. So one important thing to note is that the market is now basically 5% off the lows in a little under 2 weeks. So this isn't meant to say that the bottom's in. And if we take a look just over the past 5 years, in similar downtrends, we've had very similar moves as recent as 2022, right? Where we had a pretty significant drop lower, about a 10% drop, which is on par with what we recently got from top to bottom. And then a nice aggressive, about a 9% rally off the lows, where I bet people here were thinking, oh, you know, the bottom's in, it's time to be fully long, and let's forget about everything that happened before, only to see new lows in just a few weeks. So it's not a market to be, I'll say, trusted blindly. It's still a market that's guilty until proven innocent in terms of the bearish price action, right? We're still in a more bearish environment. Moving averages are generally trending to the downside, and also still in a downtrend in the short term from a technical perspective, right, with lower highs and lower lows. So those are all things to be keeping in mind. I'd like to think those are all concepts that we've talked about, but I'm happy to explain my thought process on any of those items if you guys feel like I could offer some more clarity. But big idea, just kind of taking it bit by bit here. From a short-term price action perspective, right, if we take a look at the EMAs here, 10 and 20 EMAs represented by these red and green clouds, still in a downtrend, maybe in the early phase of starting to trend above those moving averages here, but still in a downtrend. We're still below the 50 simple moving average, which is trending to the downside as well. So not necessarily a positive thing there, and definitely still a spot to watch out for. But again, right, probably the biggest thing the bulls have going for them is being above this 5,700 and the 200-day simple moving average on both the SPX and the SPY today. So at a high level, that's where the SPY's at. Again, balls in the bulls' court really to continue this one higher. No reason to say that the bottom is in for sure. You know, we could call the bottom and call the top all day, but it doesn't do us any favors, right? All we can do as traders is just continue to react to the price action that we get. And for now, it looks like it's a market where you want to be a little more cautious to the short side. You got some real important levels right below the 200-day in the 5770. Going to be real difficult to be short above those. So I think, again, I would be leaning a little bit more on the bull side here. after we got this move above 5,700. So as we've discussed in prior lectures, in this market in specific, right, when we get these moves lower, we really want to be paying attention to some of the names that are coming out of this kind of downtrend or correctionary period the most aggressively. And we've talked about this concept over and over again. If we just take a look at this kind of expanded tech sector ETF, which represents some software names, this is going to be a group that's moving a little bit more aggressively than the rest of the sector. The ETF doesn't exactly reflect that, but we're back above these February or December lows in this case with a little bit of power. When the S&P set new lows on 312, this one actually held up at those same lows that it set the day before. So a little bit of a positive divergence here for IGV. And some names that stand out in this sector are going to be those cybersecurity names. And we've talked about some of these in prior lectures. But one of the more interesting ones is Okta. And we talked about this as an example. I think the last time we talked about it was when it was right around this 113 spot. So it's still trading right around the same place. But from a technical perspective, right, and if you think about everything that we've discussed in this lecture series over the last couple months, really, you should be able to tell immediately that these two charts are not even close to the same, right? You have a market that's fully in correction, a market that's dropped 10% from the highs, which I guess have that annotated on the S&P. So you have a market that dropped 10% from the highs overall on the left here. And Okta has been hitting new highs. So completely opposite price action, right? And these are the names on the right that we want to be paying attention to, right? And we've talked about this concept again, and I'll just reiterate it because it's so important. But when large institutions are buying names up significantly, it's like a elephant in the bathtub, right? It's pretty goddamn obvious. They can't really hide these large financial investments into these companies. And that's exactly what you're seeing in names like Okta that are holding up so well on a downturn like this. And just taking a look from a weekly perspective, little bit uglier if you look back a little farther, which isn't the worst thing ever, right? We've seen stage one bases like this, and we've seen examples like this in this lecture series. But just taking a look at kind of the most important weekly spot on this chart, it's going to be this 114 area, which as of this week, we are holding right above it. And we've talked about these stage one bases, and we've talked about how this can be some of the more lucrative places to get involved in some kind of single stock or anything like that. But you have really two important weekly levels here, this 110 and 114.50 spot, which looking a little bit more carefully at those areas on the daily, you'll be able to pretty clearly see that it's starting to seem like we're nicely, confidently holding above these areas and a nice inside day at the highs as well. So these are the types of names that fascinate me the most in a market like this. And this is one that I'll be continuing to watch for potential moves higher. I mean, it's just sitting right under a real important spot for a larger breakout, this 117 area. So these are the type of names that really need to be focused on in markets such as this. And I feel like I probably repeated myself over the last few classes, but I know not everybody's been here. But again, just to stress this concept, right? If you are trying to get long, which you should generally be looking to get long if you're in a bull market, right? That's the general idea of a bull market, is the overall trend is higher. So you should be trying to trade with that trend for the most part. You should be looking for the names that are standing out the best. And these sort of downtrends or pullbacks make it incredibly easy to figure out what's strong and what's not. Right. And I don't mean to call out the person who called out AVGO earlier, because there could certainly be, a great trade that develops there. But comparing Okta to something like AVGO, these two names don't look the same at all in the short term, right? Especially considering what the S&P has been doing over the last few weeks. The S&P has been on a 5% bounce off the lows, which I guess all things considered, this one's doing about the same, but generally it should outperform that. But regardless, right, comparing these two names, this price action is not the same. And as a trader who is looking for opportunities to get long, you really should be focusing on that relative strength, right? Because automatically that's going to help minimize your risk, right? Because you're focusing on the names that are the strongest. And I think that's something that people have struggled with a lot, especially recently, is everybody's looking to buy the biggest dip. Everybody's looking to buy the biggest pullback, which intuitively, that kind of makes sense, right? You're trying to find the name that's dropped the most. But markets move in cycles, right? And markets rotate from sector to sector, name to name. And previous leaders aren't always going to be the future leaders, right? And there's going to be cases where that is what occurs. But in general, right, my opinion really is that you want to be focusing on the leaders. Which are names like this? And in general, the cybersecurity group as a whole continues to move in this way. CRWD with a real massive pullback recently. Oops, I can't zoom this chart appropriately. CRWD, real massive pullback recently as well. And one of the leading names coming out of this move lower on the S&P and on the Qs. So these are the names that you're going to want to continue to pay attention to, right? The names that bounce the most aggressively, because the likelihood that these run back to the highs at some point is going to be much higher than names that have declined, 50, 60, 70%. There's going to be a time and place for every theme and every name. But for example, some names that people might be married to are these kind of quantum computing names down over 50% from the highs. Could they rebound back to these highs? Certainly. But are they really the bastion of strength in this market? I wouldn't say so. And you want to focus on where money is flowing if you can afford to do so, which that's going to be really your cybersecurity names in the short term. So that was a really long-winded spiel. I want to take a quick pause. Was there anything that I mentioned that kind of confused anybody? Anything that seemed like I could explain a little bit more? This is going to be kind of on the advanced side of our beginner's course series. So I'm expecting there to be a little bit more background knowledge than I did 3 months ago in lectures, but that doesn't mean that I can't stop to explain concepts that confuse you or things that you want me to cover again before we get into the more focused content of the class. So any questions, comments, any things that I can address? One thing that I didn't mention at the beginning of the lecture is that you guys are all free to unmute your mics. We've had the mics unmuted for the last few lectures, and that's been working pretty well. So if you want to just start talking, you can also do that. JJ says won't be able to stay long, but when will this be uploaded? Yeah, so whoever's been uploading our YouTube videos, I don't actually know who does that, but it seems like that's been not happening recently. So I don't want to give you an answer to that question because I don't actually know. But in theory, it should be uploaded very soon. And now it's kind of been brought to our attention that the YouTube videos haven't been being uploaded. So I would hope within the next 1 to 2 weeks, this one will be uploaded. This is a good question. Oh, what's up, Aaron? Good to see you. I didn't see you in the chat earlier, and I thought I was kind of missing you. I didn't think you would make it tonight. Would have been your first one in a while. Good to see you. R has a good question. How would you go about searching for relative strength stocks, ETFs, etc.? Yeah, it's a great question, and there's a couple different workflows that I like to utilize. For me, generally speaking, it's going to all start on Finviz for the most part. So this is where I really like to begin my scans. So if we go here, this is where we can start to see some general sectors that have outperformed the rest of the market. So we can see some consumer cyclical names have heavily outperformed over the last week. So what we could do, and I still haven't updated my filters, but I'll just try. So I like to look for names over 5 billion if I could find that. We'll just go with the mid caps because I can't find anything better. Names over $5, names that are optionable so we can trade calls on them. And wow, is this really it? This is the list. Oh, over $5. I did under $5. Oops. I was like, seriously, 4 names? So we can see some of the names that have outperformed the best. Wow, look at this. That is not what I expected to see up top here. Carvana, Tesla, Kava. Wow, I actually haven't looked at this week. This is not quite the names that I thought I was going to see here. So Tesla is going to be one of the stronger performers in the entire market over the last week, which isn't necessarily something to get too excited about. In general, in markets that, kind of as I mentioned earlier, in downtrends, that's where you're going to get the most aggressive rallies. So it's not to say that this is, some fully unprecedented move higher. I mean, Tesla's down 50% and it's, was a $700-800 billion company. So a 27% move higher after a 50% move drop isn't anything really too shocking. But this actually looks decent. And this is a good example of a name that we can start to pay attention to as well. Names that are leading the market higher a little bit on bounces are definitely ones to pay attention to. And this is how you could, start to find some of these names, right? If you compare this to the S&P and just take a quick look at the two. Okay, that's fine. Even just comparing the last two daily bars, there's kind of a significant difference, right? And let's just load the EMAs up real quick. So to me, it feels like there's a significant difference with kind of what's going on in these two charts, right? This bar here is a lot stronger than what we got in the S&P, right? A bull bar closing near its high, little to no wicks. And then even today, right, long downside wick retesting this 270 spot, and then another bull bar closing near its high. This one feels pretty strong actually in the short term, and it's one to watch for some potential continued upside. And again, right, market's still in a downtrend, and this name is also 100% still in a downtrend. There's no way around it. But I mean, in the short term, the trend definitely looks reasonably strong higher. And we're in a market that looks like it wants to continue bouncing. I mean, we're holding above this 200. If I was betting on a move higher or a move lower from here into the end of the week, I mean, I'd have to think there's at least one move higher into the end of the week. Maybe closer up to this 584 spot before a potential lower high gets set. But again, none of the game of predicting. But if I had to guess, really feels like the market wants to move a little higher after this kind of nice back-to-back daily close. So this is just one way that you could find, relative strength names is just these FinViz scans. It's not the only way. So sometimes I like to look online too and see what other people are talking about. So there's some accounts that I like to follow on Twitter and just see kind of what they're interested in. And sometimes that's how I learn about new names that I wasn't previously trading. But that's not the necessarily the primary way that we should be looking for new stocks all the time. But definitely a viable method. So it doesn't hurt to see what other people are talking about, see what other people's are focused on. Yeah. Did I say IGB? No. So I said IGV, which is going to be an expanded tech sector ETF. So it's got like cybersecurity names, software names, that sort of thing. Cool. Any other questions? Yeah, crowd. It reached strong resistance 389, 390. You went short on it. Let's take a look. CRWD. Oops. Can't type. Yeah, so crowd got stuffed at the 50 simple moving average today, which again, kind of got to expect that, right? The market's still in a downtrend, and it's a market to be selling into strength, not buying strength at this point. This one still, at this point, it's probably still one that needs to be proven. If you didn't buy it down on this reclaim of the 200, I probably wouldn't buy it right this second. But it's definitely one that I'd be paying attention to on a move back above this 400 area. Or even on a daily close above this 50 simple and some kind of consolidation around here is one that I would probably also start to get interested in. End up taking XLF. I don't think I was paying too much attention to XLF. That's been a stronger sector recently as well, kind of leading the market higher. And again, just comparing XLF to SPY, it's a great example of a name that's got some relative strength. And we can just see how this kind of played out, right, on a daily level. Just zooming in here. Let's see, the SPY hit new lows on 313. But on 313, okay, this is a super minor example, but yeah, while the SPY was hitting new lows on 313, XLF was just starting to hit small, I mean, very, very minor higher low here. So nothing really too crazy to write home about, but starting to show some of the signs there. And again, while the S&P was consolidating at this kind of 570 spot, XLF was making continued progress higher, so a little bit of relative strength there. Yeah, Aaron, that's an interesting question. What do I think of SPY on the daily? Volume is progressively slowing. So yeah, that is 100% true, right? There's no denying that volume certainly has tapered off a bit. Just zooming out though, like volume is reasonably on par with the average volume, at least over the last few months. Like if we look back in history, back into 2023, a little bit lower volume probably, but that was also during a more significant downtrend. In terms of volume in the short term, it's reasonably common to see volume start to drop off a little bit as the market moves higher, because in general, market bottoms are going to be an event. And in order for market bottoms to be an event, it's generally going to be coupled by those high volume days, which you could see on basically every single market bottom, right? Every single one is going to have that high volume. And I mean, just looking at the prior couple examples of a significant market bottom, right? We got that exact same kind of taper down in volume, at least after the next few days that we bottomed. And it's not super uncommon. It's not something that I would consider to be bearish. It's kind of unreasonable to expect to see volume increasing every single day as price moves higher. And even from like a volume price analysis perspective, I wouldn't say that this specific move is too bearish right now, right? Because the bar that we're getting isn't necessarily a bear bar. It's mostly just neutral, right? I mean, it's a doji right at resistance. So maybe a little bit short biased, but in general, right, it's not like we're getting a big bull bar with declining volume, kind of like we did yesterday. It mostly is on par with what you would expect for a candle like this. I mean, really low volatility today. So pretty reasonable to expect volume to taper off a bit. So in my opinion, volume slowing down isn't really a reason to be bearish, especially on the indices. It's going to be a lot more common for volume to slow down on the indices, but individual names, that's not necessarily a shared characteristic. So if you look at something like Hood, for example, which isn't necessarily the best example of, the biggest winner right now, definitely been moving nicely off of the market bottom, but this one volume has stayed incredibly elevated. And I guess I can't attribute any specific reason to that, but just a bit of a difference to point out there. Ooh, a lot of questions. I like this. This is awesome, guys. Keep them coming. I'll try and get to them all. I'm basically going from the bottom of the chat up and then filling in the ones that I skipped. What would be my trade plan if I added to April or May HIMS calls today? That's a good question. Yeah, let's talk about it. So if you put a gun to my head and said buy April or May HIMS calls today, let's just start from scratch really quick. So if you said you have to buy April or May HIMS calls, what I would do is I would start from the weekly like I always do and get our most significant level, which is really that 35, right? It's that previous swing high back from November. So got to be paying attention to that previous all-time high as well. Next thing I do is zoom into the daily because there's not too much other insight for us to get from the weekly there. I would also probably toss up the volume profile and let's just get a little bit of a shorter time frame so we can see a bit more information. So nice confirmation here, right? We have a lot of nice support actually below. So I would probably mark this level off. And if you told me I need to take April, May calls, probably say my stop is below here. This is really the most realistic stop. Ooh, and really nice volume here. Actually looks kind of decent. So we have the 50 simple moving average above, trending to the upside. So that's still a positive. This one's got a lot of gaps above to be watching out for. These are definitely going to be levels of resistance to be mindful of. So probably we'll just mark that out just as something to make sure I remember. Mark the all-time high, and then I go in and just make this exact. So it's 72.98, and then turn all this on and label it. Like to have that covered. And then in terms of some shorter term levels, this seems to be the spot to beat this 37.80-ish. So realistically, this is a market where I really would rather be more focused on buying, not necessarily weakness, but buying closer to a more well-defined area where I can keep my risk a bit tighter. And again, on a name like this, your stop's really got to be below this 31.3 because that's really where the bottom was put in, especially on this volume thrust. Like you could put a stop at 35, but it's just not super realistic. So considering that I want a bit of a wider stop automatically, I'm going to probably skip the April calls and at least go to May, but I would probably go longer personally or go equity. Major profit targets got to be around this 45 spot, right? That's where we had that first kind of retest after this big move lower and failed there. So it gives us decent risk to reward, right? If we were entering at this 35 spot and selling at 45, that gives us, almost 2-to-1 risk to reward, which is pretty reasonable. Let's take a look at the hourly real quick and just see what the structure is looking like here. So this is pretty nice to see. In general, starting to get our first kind of signs of higher lows here and here, which is generally a positive. We haven't really gotten that recently. So yeah, if you made me make a trade plan on this, I would probably look for longs around the 35 spot. If 35 didn't come back into play, I guess I would take a break above 38, but I'd probably size down a bit and look to sell even earlier, maybe closer to this 40-ish area, 41-ish spot. And then I like to mark that level with some dashed lines, just so I know it's from the hourly. And then in terms of specific contracts, HIMS, you got to go closer to the money with the volatility it's got. And again, it's probably something that I would rather just trade the shares on. But yeah, if you made me trade this, I guess I would. So the 40s look decent, and the 38s look decent as well. What we could even do if we wanted to go another level to this is take a look at just flow in general and just see if there's anything interesting in here. So if we filter by HIMS and then increase the days till expiration to 120 and just see if there's anything unique. Let's see. So those are decent. I want to make sure these are all filtered appropriately. Okay. So, I mean, 4 days ago, we got some 37 calls at the ask, which, I mean, these people are up big. Oh, wait. Are these at the ask or at the bid? That's weird. Anyway, I mean, it doesn't seem like there's very much notable flow on this name to really be paying attention to or give much weight to. So I wouldn't really factor that into the analysis. But yeah, I mean, that kind of summarizes the trade plan, right? In general, I'd be looking long at 35 or above 38. If I took the trade above 38, I'd probably keep the stop tighter and try and stop below 38. If I got in at 35, I'd be able to sit a little bit tighter and probably stop out below that 31.30 daily close on that one. And then in terms of the vehicle that I would take to trade this one, for me on a high flyer like this, you said April or May HIMS calls. I probably would take even more time personally on a name like this, especially in the market that we're in. I would be even completely open to going with shares. Okay, so you said very same thought. You did 417 at 36.20. Okay, 36.20, that's a pretty reasonable entry when the MA crossover happens. So I'm assuming you're talking about the hourly, maybe, or 4 hour potentially. Yeah, ish, 36.20. Yeah, I mean, from a kind of bottoming standpoint, it looks pretty decent. You know, this volume's really nice to see. I don't hate it, but again, this name's down 50% from the highs. And you have to remember, what is it, the 50-80 rule. Let me see if I can recite this appropriately. So every time a secular leader tops, so names like HIMS, NVIDIA, Hood, PLTR, Carvana, every time one of those names top, there's an 80% chance of it dropping for 50%, which it has absolutely done that. And there's a 50% chance of it dropping 80%, which would bring us all the way down to 15. Not to say that this thing's going to drop another, basically $30 or $20, but it's something to be mindful of, and it's definitely a real thing. Maybe one of the concerns too is you didn't quite get the earnings growth that you really need to see on names like these this last quarter for some reason. I don't know what caused them to miss the bottom line there, but not exactly something that you should be looking for. Anyway, I don't really hate it, but yeah, that'd be how I would develop my trade plan. Do I use Trader Flow? Not really. It's not something that I incorporate too frequently. All right, let's talk Amazon. And I think these examples are great too because we can talk through a lot of the concepts that we've been employing, and still focus on these kind of I guess important ideas. So let's just clean this up real quick. Amazon, obviously going to be one of the best names in the market in terms of the Mag 7 and the quality there. This one has been leading the market higher ever since it bottomed in late 2022. So it's been a great name to trade, great name to invest in. It's probably going to continue to do the same, especially with their dominance in basically every field that they touch. So great name and overall great trader. I really just generally love the way that it moves. Last 2 days, nice follow through back above this 200 spot. This is really the place to beat if you are a bull or bear on this name. So nice reclaim of the 20 moving or 200 moving average and this 200 moving average in the same day. So in general, it's in more bullish than bearish territory. But for me right now, it's not at a place that I could really structure a trade on it. Like I would really need to see it either back down to this 200 area, which I have marked as 199. Like that would be probably the easiest way for me to trade this, is if it came back down here, or if it kind of consolidated a little bit as the moving averages kind of crossed over, which actually is a great segue into kind of one of the market cycle examples that I wanted to review. It's one that we've talked about all the time. This one's from Oliver Kell. He was the United States investing champion in 2020. He's got a book on kind of all the concepts that he used. Obviously 2020 was a hot market, but you got to give the guy credit. So I really like the way he describes kind of the way he trades. It feels really similar to the way that a lot of us trade in OOT, but what's it called? There's just more structure to it, more definition, which I really like. So anyway, what we have here is kind of just a quick description of a market cycle where we have the 10 EMA in red, 20 EMA in blue, and just a couple phases that names go through as they kind of trend and bottom and top and whatever. So right now, if we're looking at Amazon, we're in this kind of reversal extension and wedge pop phase where we've gotten this initial break above the moving averages. The moving averages are kind of working back to cross positively. So definitely a more likely bottom is in than not. And the most ideal or favorable place for us to get involved would be this EMA crossback phase. If we got, maybe a continued move higher, maybe say up to this 210 spot, and then consolidated a little bit after the EMAs flipped over with a more positive trend, that would be, a really ideal spot. If the moving averages continued in a trend in something like this, and this is super crude, but this line here, I'll give us a color code here. This line here being the 10 EMA, and this one here being the 20. If we could get involved in something like this, once these EMAs flip back positive, EMAs cross back, and we get that nice consolidation into now rising EMAs, and even too, we have a really nice spot here. So if it happened all around that 203, would be pretty nice. Anyway, I'm getting into a really wishful line of thinking here, but regardless, I think it's not at a place that I would personally trade it yet, but it definitely should be a candidate for everybody's watch list if the market does want to continue higher from here. Generally speaking, it's moving really nicely. It's back above these declining moving averages. Again, no other way to describe it other than it's still obviously in a downtrend. Lower highs, lower lows, EMAs trending lower, but zooming out to the weekly, nice. Oops, God, I can't. I'm clicking every time frame like the weekly. Looking at the weekly here, it's got a nice look to it, right? These two nice long downside wicks below this kind of key spot around 200, and even almost a wick. Yeah, look at that. Right back to those previous all-time highs. I didn't even see that. Check that out. That would have been a sniper entry right around that 188. So it's got a nice look to it. It definitely looks like it wants higher. But again, I would have to see a little bit more of a concrete setup to get involved because, again, it's a market where nothing's innocent or everything's guilty until proven innocent. God, I can't talk. But again, I can't stress this enough too. In any downtrend, this is when you get the most aggressive rallies. Like every time a stock moves lower significantly, that's when you get the most aggressive rallies. Bear markets are where stocks move the most significantly. And I'm not saying that we're in a bear market here, but there was, let's see, how many significant rallies for Amazon in the 2022 bear. This is a 28% rally in Amazon here, a 40% rally in Amazon here, a 16% rally, and a 40% rally before this name actually bottomed. So again, just a little bit of historical context there. This is where we get the most aggressive rallies, right? These are the conditions where they come, and not to say that we're headed for a bear market because, there's nobody who could really tell us that or not. But anyway, Amazon looks nice. Thoughts on PayPal? Yeah, I'll take a look. I think I know what I'm going to say, but I might as well look at it. Yeah, so PayPal is an example of a name that's just generally been so weak recently. And I mean, it's been a name that I've basically just fully ignored. It doesn't really interest me at all. I'll even clean this up and we can just take a look at it more carefully. Definitely basing on the weekly, there's no denying that, and maybe a little uptrend for us to start paying attention to. But I think what this is probably going to take is some kind of fundamental change in their business or some kind of catalyst. And even if you look over the last 3 quarters, right, their earnings has been completely stagnant, right, with the bottom line being basically the same 3 quarters in a row, which investors are looking for some kind of growth or future growth. And if those forecasts aren't there, there's not too much of a reason to be involved. So this one for me isn't one that I realistically touch until we're at least above 102. But I'd probably wait even longer until we get above that 118 spot. So it's not something that I'd be in a rush to get involved in personally. Yeah, Rob. So FinViz is free. Yeah, so it's free. I think there's ads and stuff, and you could probably pay, but that's not required. Okay, I think that covers all the questions. Is there anything else you want to talk about, or else I'll probably go back to my Oliver Kell market cycle and talk a little bit about that. And yeah, I mean, it's one of my favorite things to teach and talk about. And yeah, if anybody knows him, love to bring him in for a lecture. That would be really sick. Questions, comments, anything that I can address? I just realized what time it is. I completely lost track, but I realized what time it is because I could feel the dryness in my throat from yapping. All right. Bailey wants to take a look at TEM. Yeah, so that was one of those previous kind of AI health high flyers. This one is actually pretty interesting as well. It's going to be a more volatile name just because of the sector and kind of the reason that it rallied in the first place. This fully rallied based on that investment from Nancy Pelosi. But in general, it looks, decent in the short term, right? It's making it back above that 56.50, which was that previous pivot after we saw the investment from Nancy. Back above the 50 simple. There's not even the 200 moving average on the chart here. So I like it, actually. I actually like this one long. Really, so long as it holds these lows here, 54.22-ish, I guess 54.18. But I actually like this one. It's got massive volume. Clearly there's interest in the name. I mean, that can't be any more obvious, right? You can just see the average volume continue to ramp up higher and higher. So it's at a nice spot, I think. And I mean, if you're day trading it, it's a pretty nice level to trade it off of, right around that 59 area. I personally am not much of a day trader, at least right now, but if you wanted to, that's probably a decent spot to trade it. In terms of a longer term trade and how I would structure that, I probably would just stay long above the 56.50s. I'll answer Aaron's question because it's easier, and then we'll go to Oliver's. So TOS script for volume shelf, there's no script, but I'll just open it up and show you my settings really quick and talk you through the changes. So by default, the volume profile has a couple different settings that I just like to change. So the price per row height mode, I go with tick size. Normally it just uses automatic, and you can kind of see the difference there. It just changes the size of the blocks. So I'm switching to tick size. Let's see, the on expansion, I change from yes to no. If it's yes, it looks like this. I don't like it over there. I think it's ugly. So I change it to no. The value area, I change that to no. In some studies, I have that as yes, but I just don't really use the value area too much. And then the opacity I change, but that's really just a visual kind of thing there. And then everything else is just visual stuff. So I change the color and stuff like that and hide levels, but that's all visual. So those are the most important functional settings, is changing it to tick size and then changing it on expansion to no. That's all I really do. So no script, just like that. Okay, how do you day trade using the this kind of crossover thing? Yeah, so it's an excellent question, right? So again, just kind of recapping this model as a whole, it's generally rooted in the 10 and 20 exponential moving averages, which for the most part is going to be very similar to your 9 and 21 or other kind of similar moving averages. So there's not too much of a difference, but I personally used to previously use the 9 and 21 EMAs, and after reading this book, I switched to 10 and 20, but functionally, they're not going to be all that different. But anyway, the thought kind of behind this kind of framework as a whole is that some of the more kind of favorable trading periods are going to be when these names are trending, right? So the idea is that this system is used to find high probability and high quality entry points in a trend, or also be able to identify places where there are reasonable locations to sell, So in general, the kind of higher probability locations to enter in trend are going to be these kind of crossback phases where we get some kind of consolidation back into the moving averages. And some of the better places to sell are going to be where you get extensions super far away from the moving averages, which we'll talk about that because that's a little bit more nuanced. And then obviously, when you get this sort of wedge drop phase where the EMAs start to turn to the downside, and you get that break of structure where we start to get lower highs and lower lows. So in general, it's actually very simple. And one of my favorite examples to talk about this is actually PLTR, which I still have annotated from basically all these sort of things. So if we just take a look at this name all the way back to this kind of time frame, let's just look at the weekly really quick. So combining a couple different concepts here. From a weekly perspective, right, PLTR really hadn't broken out at all through this entire period, right? So to me, as long as PLTR was below 29, the name is, for all intents and purposes, in a range. And while that wasn't fundamentally true, right, there's definitely trades to be had during this entire period. For the purposes of this specific example, I want to just try and ignore any time frame when PLTR was below this 29 spot. So now that we've established that the name's kind of broken out on the weekly once it's above this 29 spot, taking a look at some kind of really simple structured entries here, you have a couple just really simple consolidations just directly into the moving averages. You have positively trending moving averages and a real nice kind of spot to structure your risk around 29.33. Again, another kind of crossback here where in this phase here, we're a bit extended from the EMAs, so there's no real high quality entry here. So, I mean, funny enough, like at least for me, right, there's no real kind of way for us to define our risk super easily when we're entering on something that's just kind of moving straight up, right? When we get this kind of consolidation or pullback, we get a really easy way to define our risk, right? Where we can basically just say below this low, we can take a stop, right? Because at that point, this structure is a little bit more ugly than we were hoping for. So for example, we could draw maybe this mini trend here after this consolidation into the EMAs, nice move higher there. And again, right, similarly, depending on how we want to structure this, right, we have a nice low set at the EMAs here, decent crossback here leading to a nice move higher. This one was a fake breakout and then failed lower, so very easy to want to stop out in this phase, so I wouldn't necessarily blame you for that. But you can kind of see how these cycles repeat, right? It's not something that really happens just once or just twice. And we could see that first kind of real major reversal extension was right around here. And in general, it's in hindsight kind of obvious. We have this first one here where we have this big bearish engulfing bar. And one thing that the book says is that one reversal extension is generally acceptable, but once you start to get in the 2 and 3 reversal extension range, that's really where the probability of a longer term reversal starts to set in. And that's kind of what happened here, where we have this huge bear bar right back into the EMAs and ultimately moved in that longer period of kind of more downside action. But this cycle repeats over and over. And yeah, this is something that we can see on a lot of different names. I mean, I'm sure if I still have Hood annotated, has some similar characteristics. I guess I don't have that one annotated up. I have a whole PowerPoint on like a lot of these studies that I've done in the past. So let me pull that up really quick. Just a lot of different back tests I've ran, kind of running this sort of idea. Yeah, here we go. So we've looked at this PowerPoint together before. Some of just kind of the stronger names that performed in 2024. And we can see, right, these phases where we're getting these rallies into declining 10 and 20 EMAs should remind you a little bit more of this kind of phase where this stage 4 decline begins and we get basically a wedge drop, right, where we break below the EMAs and a simple consolidation into the EMAs and then obviously a massive move lower. And again, that first real rally into the EMAs, once again, met with sellers there, so not much of a reason to be involved. And then this first crossback phase, we enter here. And then from this point forward, you can kind of see the bases right into these EMAs. And this is a weekly time frame, so it's a really long-term chart. But hopefully you get the idea there. And let's see if I have any other good examples. GEV is a decent one as well. Same concept, right? Where these EMAs flip positive, we get this longer-term weekly breakout. And basically every single base consolidates into the EMAs, then continues higher, which is really a sign of strength, right? When there's not many opportunities to get in, when the name looks really strong, that's just a telltale sign of a name that's got a lot of strength. And let's see, yeah, PLTR, similar idea. Toast wasn't quite there yet when I did this study. So anyway, this is a concept that isn't really a one-off. It's something that happens kind of all the time. And a lot of the biggest winners in 2024 showed these characteristics. And Boomer says, "What time frame?" Yeah, so it's an interesting question. It's definitely a concept that can be applied on all time frames, and one that I like the most actually is using this kind of on the hourly time frame. I find it to be pretty powerful, and we can see kind of how that's been playing out recently on the SPY. A bit more volatile, so kind of more of a difficult phase here. But let's see if we can think of something. Probably crowd would be a sick one to take a look at here. So let's see. Let's just mark the day that it got back above the 200 day because he really shouldn't have been involved in it any time since then. So let's mark that out. Okay, so this was the day it kind of came back and retested that 200-day moving average right here, right? So we get a retest of that 200-day moving average. Then the very next day in pre-market, you get that EMA kind of crossback phase, a little bit of consolidation into the EMAs, and also we have this kind of key level to be watching out for, 347, and really didn't give a single opportunity to get back onto the bus until right about here, where we can see very similar price action, right? And these declining phases, or when the EMAs are declining, right? Generally you can see these rallies are sold. And once we start to see these EMAs flip positive, right, we can find these really interesting areas where we can start to define maybe some higher quality trades, right? And this is from the hourly, but this is a simple one, right? EMAs are flipping positive. We can see that green cloud in there, 370 area. I mean, 3 bars bouncing right off that spot. And let's just see what that looked like on the 5 minute, just because why not? Yeah, so pretty clean. Little bit of a fake breakout, but I mean, this wouldn't be something that you should stop out on if you were using a prior low as a stop. But anyway, maybe that's justification to do so. So anyway, yeah, this concept applies on all time frames. You know, it's something that you should be looking at, not just independently, right? You can't just get long when the EMAs are positive and get short when the EMAs are negative, right? If it was that easy, everybody would do it. So there's a little bit more consideration that you need to put into it. Like for example, you could see how I added a little bit more analysis here, where we're looking at CRWD, which is a name in a sector that has been strong recently. At the time, it wasn't necessarily, but it did bottom before the rest of the market, right? It put a bottom in 310 and 311. And these are kind of putting, this is actually a really good example, putting everything together. So let's talk through this, right? So how could you have identified a name such as this? Well, obviously you would have had to have it on your watch list before, which every prior leader of the market you should have on your watch list at all times. You should always be watching how the leaders have performed, especially in periods such as this. So we can see, zooming in a little bit more carefully here, on 310, crowd bottomed, which was this day here on the SPY. On 313, the SPY bottomed. And when that happened, crowd had already reclaimed the 200-day moving average. It was literally 10% off the lows as SPY was still trying to find that bottom. And I'm sure we'll see a very similar story with the Qs here, where on 313, Qs was setting a new low, even more aggressive here. And the crowd was already 10% off the bottom. So that's going to be your first indication that, hey, this name's strong, right? It doesn't mean you had to catch the bottom, though. And I want to be clear, right? This is hindsight trading. I can look at any chart and tell you, oh, look how good this name did. So take it with a grain of salt. But, these examples hold true, and it's not something that's going to go away. And it's literally, we've been talking about this for months too, like, well, maybe not months, but at least for weeks, right? Pay attention to the leaders, focus on the leaders. And I don't know if we've talked about crowd and lecture before, but at least during the downtrend. But anyway, concept still applies. So really what the workflow is here, at least when markets are in a downtrend such as this, is identify names at bottom before the rest of the market, which crowd checks that box. Additionally, crowd made it above a really significant pivot before the market even bottomed, right back above the 200 moving average, which if you don't know already, 200-day moving average is totally a line in the sand. It's a massive level to be paying attention to. It's basically the average price over the last year, so it's going to be significant. So we have two things already going for it. Number three is it's in a sector that's strong in general, right? If we look at other cybersecurity names, RBRK, it also in the sector, Okta also in the sector, right? That cybersecurity sort of name. I can't think of more off the top of my head right now, but Snow maybe. Yeah, snow, I guess not as beautiful, but similar idea. Anyway, it's got three things going for it without even thinking about, the EMAs. And obviously, the next piece is that the EMAs are going to cross back on the lower timeframes before they cross back on the higher timeframes. So it'll allow you to get a little bit more of an aggressive entry. But again, when you are entering long and downtrends, you have to be selling into strength, right? Every stock is guilty until proven innocent when it's in the downtrend. So just because you bought the dip and just because you're up 10% doesn't mean that you should just continue holding because you think you got the bottom. Again, this name is still in a downtrend, right? No matter how good it looks, it's up what 30% off the lows. It looks great, but it's still setting a lower high, right? It's still below this 400, so still not quite out of the woods yet. And then going back into the 1 hour time frame, right? This Thursday, was where we bottomed at the 200 moving average. And obviously, as a hindsight trader, I could just say, you could have just got long at the 200 and, you'd be up 30%, right? And that's not super realistic, but a more realistic entry would have been taking a look at the prior day's high, right? Which was around this 347 spot, actually a little bit lower. Well, that works, right? This day's high here. And we can see how we behaved, right? We got an EMA crossback. We started to consolidate above this 347. And even if you were real scared of this one and you wanted to just wait for a real clear close above, you could have long this hourly close too. Again, in hindsight, right? Easy to say that. Realistically, the entry is going to be at 347-ish. Yeah, in terms of targets where you would have wanted to start thinking about exiting, obviously EMAs, these daily EMAs are going to be targets for you, right? This 10 and 20 EMA, you got to consider taking some off there. So that would have been 352 and 367, which ended up being decent spots to trim a bit, but obviously not the top, which is why you can trim, protect some of those profits and let some more ride if you so please. But don't get married to any trade. This isn't a market where you should be looking for the best trade that you hit 6 months ago and try to do the same thing on it. Focus on the new emerging leaders. Focus on the names that are strong, especially after all these lectures that hopefully a lot of you have been through. You have the tools in your tool belt to start identifying these, right? You know how to identify strength, and we reviewed a lot of examples today, and we'll probably review more examples as we continue to come out of this downtrend. But you guys have the knowledge. It's all about starting to practice and put that to work. Yeah, Boomer says the inclusion of extended hours data seems to notably affect EMAs. Not sure how to interpret that or identify if it's relevant. So yeah, I mean, it's a completely fair point. Some people definitely would probably prefer to have the EMAs without the extended hours. Just on some of the things that I've read and studied, I'd like to just keep the extended hours on and let the EMAs calculate with those on as well. But if whatever. If you feel like you would rather not have them on, it's not the worst thing ever, I don't think. I mean, obviously, there's a pretty big change here, but let's just see what this would have done for this specific example. So for this specific example, the entry still would have been basically the same. EMA is calculated pretty similarly here, but yeah, kind of comes down to personal preference. I think extended hours is going to introduce a little bit more volatility to the EMAs that maybe you weren't looking for, but oh, this is a really nice example too. This is nice. That's actually one of the positives of turning extended hours off is you can see stuff like that really cleanly. That's nice. I guess you can see it pretty cleanly still with the pre-market on, but any other questions or things that we want to discuss? I can't believe this went by so quick. I really don't know how this happens sometimes.
Could you chart Uber, please? Uber?
Yeah, let's look at Uber. Did you ask? Were you in Tilio's lecture talking about Uber too? I know somebody was. Okay. Yeah, I mean, Uber actually, again, one of the names that looks a little bit more decent, right? Holding up pretty well in a market that's trended significantly lower. This name was only down 15% at the lows, which, if you can think about it, right? The S&P was down 10% at the lows. QQQ was down about 15% at the lows. Generally speaking, there's a, I guess, metric or coefficient called beta, which generally represents the amount a stock will move. I don't know exactly what it's relative, to be honest. I haven't studied it enough, but generally speaking, the higher the beta, the more volatile a name will be compared to less volatile names. Anyway, not super relevant. That's a long-winded way of me saying a name like Uber should have been down much more with the rest of the market, right? It would have been down if it was down 30%, was the rest of the market was down 15%. That wouldn't have been super shocking, but it actually held up pretty well, all things considered. Bottom on the 13th, has held the 200 moving average. Another positive going for it too is the EMAs are flipping positive. Also, all the simple moving averages are turning positive too, back above the 50, back above the 200. So from that perspective, it's in a basically a full blown bull trend. I actually like Uber. I think it looks decent too, and it's got some fundamental kind of tailwinds as well, and maybe even a little bit of a trend break that you can watch for potentially a retest here for something like that. Maybe a little bit too steep to look for a retest there. But yeah, I actually like Uber. I think it looks pretty decent here. Let's just take a look at this. Let's see. Okay. Yeah, so right now the level to beat really for it is a 77 area. Taking a look on the hourly here. Trend is up. It's holding this 75 spot. Definitely, this is somewhere where you don't want to see it lose in the short term if you're bullish. If it loses that, it probably heads down to this 73-ish spot. But I actually don't hate Uber. I think it actually looks pretty decent. It kind of looks like it wants to come back to these EMAs though. So a retest to 74-ish doesn't seem to be out of the cards there. But even from a volume price analysis perspective, it actually looks pretty good too. On this move higher, nice rising volume. Move lower, we're starting to see that declining volume, or at least average volume, which is a positive. So yeah, I actually like it. I think it looks good. This is a name that I would be more interested in getting involved than maybe some others. Maybe you have this trend working in your favor too a little bit, something like that. Yeah, I like it. It's a good name.
Uh, Thank you. If nobody has a question, can I ask a little bit of a longer question? But I'll let others go first because the question I have might be a little bit longer.
Okay. Yeah,
Uh,
this is an unrelated question from Sand. How did I get my name to show up at the top left corner? I just wrote a script for it. Yeah, it's just this script. I'll just show you it. I mean, it's really simple. Um, yeah, this is it. It's all pasted in the chat. It's like it's really easy. You could make it say your own name in the top left pretty simply as well. All you have to do is just edit this script and make it say what you want. You know, I could make it say Luis, and it'll now say Luis's name. So it's pretty easy, and I could turn that off too. That's it. It's simple. All right, you got the floor. What do you got? Let's take the longer question. I'm interested to see what it is.
okay, so basically I recently read into Uber before the big what was like the 10% bounce up, and it
Hmm.
read more or less around the lines of 80% of Wall Street investors are bearish on Tesla, and something like 60% of retail investors are bearish on Tesla. So if
Hmm.
some again so I was told the vast majority of the pricing is controlled by like the Wall Street fund managers because they have so much money. But if so many names are so bullish on Tesla, I mean, it's pretty obvious that a lot of people are probably buying and holding based on the price action. Yeah. So I'm pretty just trying to say, like, my article that I read was kind of wrong, it seems like. Yeah.
Yeah, I mean it's a fair thing to discuss too, and I see why it's a little bit more of a conversation. In general, at least me personally, right? I feel like, and this is maybe more of a conspiracy theory, but I feel like a lot of the like financial media pieces are not very trustworthy, and maybe you have somebody or a group that you like a lot, and it seems to be, more non-biased reporting. But I feel like in general, even like analyst price target upgrades and downgrades, you'll see, I think at least for Robinhood, it got an analyst upgrade, I think like on the day after earnings, which is basically where it hit the highs, or like all these analysts upgraded right after earnings. So like they really don't know much more than the rest of us, if any more than the rest of us. So I truly do believe that news tends not to necessarily manipulate retail investors, but tends to try and manipulate the minds of just the general market participants. I think as a whole, retail investors are a pretty small fish in a really big pond. So getting retail investors to sell doesn't really do much for the bottom line, but if we can get one fund to think a different way, that would be huge. So that's a long-winded way of me saying that, while people might be bearish on Tesla, while people might be bearish on any name, the majority of the market is always going to be wrong, and that's just fundamentally why the market works the way it does. And there's a couple things that I like to cite. If we take a look at least this, let's see, what am I looking for? I can't remember. This one. So this is kind of an investor sentiment survey that's ran every Wednesday. And you could see that the members of this group over the last 4 weeks, 50% of them or more have been bearish over the next 6 months. They think the stock market will be lower over the next 6 months. And maybe they're right, maybe they're not. But you could see when they were the most bullish was July 17th, 2024. And I can almost guarantee you that there's probably a pullback pretty soon after that. Yeah, look at this. This is great. So, wow, I didn't even know this was actually going to be true. So July 17th was the highest amount of bullish people on this survey, 7/17/2024, or the week ending now, 7/17/2024, which is somewhere in here. This is when the most people were bullish in this group over the last year. And what the hell happened after that? Market dropped 10% in 3 weeks, basically. So fundamentally, that's, I think, where you start to see those big shifts in prices when sentiment, one way or another, starts to get a little crowded. So again, another long-winded way of me saying, I wouldn't personally take into account what other people are thinking. If a lot of other people are bearish or a lot of other people are bullish on a name, I wouldn't let that sway you too much, right? I mean, fundamentally, the way the market works is it's a zero-sum game. If you buy shares, somebody sold them to you. So, well, why do they sell them to you, right? Are they bearish, or are they taking profits, or what? Anyway, yeah, I mean, what are your thoughts on that in general? Did that kind of answer your question? I know I got a little off topic.
Yeah, that did great. Thank you. It helped a lot. Thank you.
Okay, cool. Yeah, I appreciate the question, and it's a fun conversation too. And I'm not trying to sound like a conspiracy theorist, because I don't know if truly the media does try to manipulate people. I would say I'm more suspicious than not, but I don't know, and I personally really don't care. But it's just something to be careful of. At the end of the day, right? You got to trust yourself and trust your own analysis. And if you're right or wrong, that's great. But I personally would never expect myself to get long or short, because the majority of people are also long or short. Generally, that tends to be where when you're close to a top. And I think the last good example that I can think of that is, this is actually a really funny example. One of my favorite examples of being able to call a top in Bitcoin was right around this time. And I sent a couple messages, and I got to find them. Let me see. Top. Hang on, let me find it. I just gotta find it. Let me try and find this. Okay. Yeah. So this is good. So let me pull this up really quick. See if I can find a way to open the screenshot up. I guess I'll just put it in this chat and then open it up. So these are some messages I was sending, just basically MMA. 1/19/2025. That was right around the time when Trump coin released. 1/19/2025. It was well, I guess I can't see the price, but it was basically between these 2 days, Trump coin released. And to me, that's going to be probably one of the most obvious places where the market could top. And it's really funny how these messages aged. Where when you have people like that getting into the market, obviously they're bullish on crypto, whatever. Um, it's pretty obvious that things are getting a little bit overblown. And the same cycle in crypto was seen with NFTs, right? When everybody and their brother was making NFTs, that was when crypto started to top out back in 2021. And when everybody and their brother were making meme coins in 2024, 2025, that was when crypto topped out again. Now, not to say that crypto is top forever and, never going to see this price again, but these sorts of massive pushes in sentiment are generally where we see significant tops and significant bottoms, right? When sentiment is the worst, right? When people are the most bearish, is generally when you see price start to reverse, right? When Tesla was at 100, everybody was bearish. People were freaking out online. All the Tesla investors were selling. One of my favorite Tesla accounts that freak out on Twitter, Squawk Square, was freaking out here and telling Elon he needs to quit Twitter and blah blah blah, and the world was over, and nobody wanted to buy Tesla, and it basically 5x from that price or 4x. So when people are most interested in buying or least interested in buying, that's when you generally see significant shifts in price. And it's something that we've seen multiple times. And there's a reason, I'm not here to toot my own horn. And I kind of got lucky saying, and I guess it was kind of a backhanded thing, either crypto is going to top out here or everything changes. But I guess this message helps me feel a little bit better. But regardless, these are events that anybody can identify, right? I'm not a genius at all in any way, but it doesn't take much to just understand where overall sentiment is at. And when people are so just freaked out about everything, same thing with tariffs, right? People are so freaked out about tariffs. The world's going to end, blah blah blah. When sentiment is the worst, that's generally when markets bottom. So again, I'm really rambling there, but hopefully that makes sense.
Thank you. It helped a lot, actually.
Cool. Yeah, happy to answer the question. HC calls at 358 would be a day trade April-May expiration. HC's been a ripper recently. Let's just clean this up a little. I haven't taken a look. So obviously you got to watch out for that 415 area. Again, obviously that 330 spot is really important. Those are probably going to be the best weekly levels we're paying attention to. So you're saying 358-ish. So no real daily levels around that spot. Let's take a look here. 358. Where is 358? 358. Okay, so today's low is basically right around here. Yeah, I mean, definitely an aggressive bid came in there. I like, honestly, this 361 level a bit better from an hourly perspective, or I guess actually I don't like that. I like 360 a little bit better, right around there. Home Depot's in a weird spot though, Aaron. Honestly, it's a name that's just now just right at the EMAs. I mean, yeah, for a day trade, I guess I could see it. I like it better off the 360 personally for a day trade, but for like a longer term trade, I am kind of a little bit more hesitant here. I would rather to see at this point, I'd rather it prove itself. And I guess you're right at this trend where you could maybe structure a trade over 364-ish, but yeah, I mean, it's been a great name in the past. It's I'd say not the biggest highlight of the market now. I think there's probably stronger trades personally. Um, but it's at a key level. I mean, yeah, this 363 area, you could definitely get long above that. And for a day trade, 360 is decent as well. But this isn't something that I personally think is an A plus setup right now. Maybe for this market, it's a pretty decent setup, but I wouldn't call it an A plus setup. Oh, but you're trying to day trade April, May expiration. I actually like that a little better, honestly, because you could swing that pretty easy and just stop below 360 and probably be pretty happy with yourself. So I actually like that a little better. I love day trading those monthlies, honestly. That's my favorite way to day trade. Cool. All right, everybody. Well, I think that's going to do it for us tonight. I really appreciate you guys all being here. Hopefully, this lecture wasn't too non-structured. I know we kind of talked about a lot, but we'll probably have a similar lecture next week, and just continue to have these discussions. And hopefully, this is helping starting to put all these topics together. Yeah, really appreciate you guys being here, and yeah, glad to see that you guys enjoyed. It's a pleasure having you guys here. It's I haven't said it in a while, but these lectures aren't the same without everybody here. It wouldn't be any fun if I was just in here talking to myself. That'd be pretty lame. So great to have you guys all here live. I really appreciate it. And I will see you all in the next one. Have a great night, everybody. Peace.